Top three things in my notebook this morning. Number one, Japan. Number two, Italy. And number three, one of our favorites for 2014, commodities, commodity inflation specifically. So first on Japan, two big signals. Number one, the yen gets immediate term trade oversold. And number two, in kind, the Nikkei gets immediate term trade overbought. So again, to start April, looks like a very good spot to short Japanese equities and potentially buy the yen versus the dollar. I'm not quite as sure by the second part of that, but certainly on the first part, shorting Japanese equities makes a lot of sense. Now, secondly, in Italy, this is again Hedgeye Playbook 101. You saw inflation from a consumer price perspective, in other words, a tax cut, come in, in full here in Italy, a 0.4% March consumer price inflation report, which is fantastic for consumers in Italy. It's fantastic for marginal real growth, consumption growth in Italy. And the Italian stock market agrees. It's up 14.2% for the year to date. So again, Italy reminds us a lot of last year in the U.S., don't forget, when we had the confluence of both the currency rising and consumption growth improving. And again, that's a good thing for the Italians. Not a good thing here, obviously. We have the upside down of that from a currency perspective. And then finally, commodity inflation. If you didn't know, now you know. The best macro trade for 2014 year to date at the end of the first quarter is going to be being long food inflation, up 19.3% versus the Dow down 1.5%. Again, huge performance divergence in terms of being long inflation. And again, you can just accept it and buy it. You can get long inflation by buying inflation. CRB index, which is 19 commodities, up 9%. And again, food up 19.3% on the CRB foodstuffs index for the year to date. And those are your top three things.